Hi, everyone. I think we're going to begin. Thank you for coming to Financial Management in Times of Crisis. My name is Lo, and I would like to begin by acknowledging the land that I am on today is the traditional territory of many nations, including the Mississaugas of the Credit and the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. I also acknowledge that Toronto is covered by Treaty 13, signed with the Mississaugas of the Credit, and the Williams Treaty, signed with multiple Mississaugas and Chippewa bands. I give thanks for the privilege to live, work, and make home on this land. I wanted to acknowledge that I'm a settler on this land. My great-grandparents came here before 1900, seeking refuge from pogroms threatening Jews throughout Russia. This meeting is virtual, and we are not all gathered in one place, so I understand that this land acknowledgement might not be for the territory you are currently on. I would like to acknowledge and thank Ruth Colazar Green for her teachings on land acknowledgements and encourage everyone to watch her talk if you haven't done so already. It was really wonderful. I would also like to mention that as I'm giving this presentation, I'm very single-minded. I'm not great at multiple tasking. So in terms of the chat, feel free to use it, but I'm gonna let you know right now that I won't be looking at the chat until after my slides, which probably my slides are about a half an hour or so. And then at that point, I'm hoping that this session can really be a sharing of what we've all been through in terms of financial management. And if we can, you know, just talk to each other and share stories. I'm excited to share the stories from YWCA Toronto with you today. So at the end, I will look at the chat and call upon you. You can unmute yourselves. There's the function to unmute yourselves, and we'll be able to speak together. So I just wanted to share a little bit about me. I've been working in this wonderful charitable sector for over 35 years in the finance role. I've done mostly financial, like I'm the director of finance now at YWCA. I've been a financial manager or finance director or consultant in various nonprofits and charities. I've also sat on various boards and done some teaching, specifically through at the Schulich School of Business. There was a succession planning round that was created by United Way, Metcalf, and York University to kind of look at succession planning in the sector. So a little bit about YWCA Toronto, which I will be drawing on for my talk today. YWCA Toronto, we are a multi-service organization. We serve women and gender diverse folk in the areas of housing and shelter, in employment programs, in girls and family programs. So we have a camping program, as well as we do advocacy, and we consider advocacy to be one of our key program areas. We have nearly 300 full-time staff. So I know that we're very big, and I want to say that even though we're big, you know, I want to recognize that. I also want to recognize that, you know, there's a lot of learning that can be shared across organizations. Just because we're big does not mean that we know anything more than everybody else. So we have nearly 300 full-time staff. We're 70% government funded, which has been actually a real plus in this time of COVID, I have to say. I'm sure many of you would feel that too, that some of the government funded programs have been, in fact, what's kept us the most stable through this time, if we've been stable, which I'm going to get into as well. A significant portion, though, 30% of our funding is non-government, and it includes basically user fees. So fees for camp. We rent out space in our building at Elm Street. We rent out space for meetings. We also have a restaurant that we rent space out to, and that's not, none of those fees, those are all user fees. We also, of course, have a philanthropy department and our Women of Distinction signature event. And these are all key for this talk because what happened at COVID time was our non-government funding was completely decimated. So I'm going to get into that as well. So I wanted just to frame this in a bit of a pre-COVID moment. So because I think what we've learned certainly is that whatever we had going into COVID was something that we could really draw on once we were into the pandemic. And I think that, you know, auditors always talk about controls and your controls that are in throughout your systems in an organization. And I think the thing for us is that we relied a lot on our controls even pre-COVID. So some of the controls that we have been, you know, very like firm about and a big believer in have been doing things like monthly internal variance reporting. So in our organization, we're broken up into program areas, and the program areas have managers, and each manager is given control over their budget. And that means that every month we send out reports to them that show the variances in their, you know, from budget to actuals. And that's a control because when you're looking at that report, something could jump out at you. For example, if suddenly, you know, under travel, you see thousands of dollars that you know you didn't approve and you don't expect to have seen it in there, that would be a control that you would, you know, come back to the finance department and say, what is this doing in my budget? And from that, we would track to make sure that A, there wasn't a mistake, but B, there wasn't something, you know, that we didn't know how that expense got in there. So that's a good control to just make sure that every month you're looking at your variances, budget to actual. Every quarter, we do something that is, I really enjoy it because it's a way for me to to sit with our whole entire organization. I meet with every manager and every director, program by program, sorry, and we look at every budget, and we basically look at every line. And, you know, I like to say the numbers tell a story. So every line that's a little bit off tells the story. So for example, we do shelters. If our, you know, if our food budget is very high, you know, that's a story right there. There's a reason for that. Are there more people in the shelter? Is it because of COVID? There's more, you know, food that's needed. So every variance is actually a story, and I roll up each of those numbers into a final summary number and present that to our board. And of course, funders also want quarterly reports. One of the things I also like to say is the budget is the budget, you cannot budge it. So meaning that once you strike your budget at the beginning of the year, that should be a document that your board, your staff, your volunteers, everyone knows that is the budget. It stays as it is. Now, as we know, the year is long and many things happen throughout the year, and there's always lots of changes, and there's always a need to change that number, but we don't change the budget. What we do is we change the projection. So we cast a projection against that budget, and then we're able to say, well, our budget originally was a deficit of 200,000. As we go throughout the year, and now we're in the second quarter, we're actually looking at a surplus of 30,000 or so on. So, I mean, these are just examples, but we like to look at keeping the budget as is, talking about what happened between now and the budget, and then casting a new number as the projection. Also, as a control, follow-up protocols, as I explained about, you know, if one of your variances are significantly high, you would follow up and find out what that is. So, you know, making sure that you have follow-up protocols in place. So for variance reporting, and also just to ensure that everyone who's supposed to get the financial reports receives the financial reports. If you didn't receive a financial report, you would follow up to say, where is it? So just making sure that everyone's got their hands on the numbers. Financial oversight, you know, obviously I love that. But what I mean by this is having everyone involved in financial oversight. So everyone who has a role in charging anything to your various budget or cost centers should also make sure that they're getting those reports so they can review. I can't stress enough that the ED, or in our case, it's the CEO, their involvement in finances is pretty key. So while, you know, I, of course, am being relied upon as the director of finance, it's very helpful that I have a CEO who I can talk to about our financial situation and who looks at everything pretty carefully as well. At the YWCA, I'll share with you that we do project a deficit budget each year. We do this because we get to a point in our budget day where we can't cut expenses anymore, and we don't take fundraising and make that a plug, even though, you know, it's not like we make fundraising as real as it possibly can be. So we're often left with a deficit at budget time. What I can also tell you is that out of 10 years, for example, 6 out of 10 years, we won't end the year with a deficit. So even though we budgeted for it, we know there are a lot of factors, and we would never budget for these factors. So for example, one that comes to mind is benefits cost. So when we bring staff on, they have to wait, in our case, 3 months before they're afforded the full suite of our benefits plan. Now, our full suite of our benefits plan is 25% in terms of a budget number. So if we budget every staff with an additional 25%, there may be some staff who come partway through the year where that 25% isn't going to be fully charged to their salary. So there will be some savings there, but we don't budget that number because it's too hard to know. We can't know how many staff we will have turnover in the year. We can't know certain things. So we leave our budget in a deficit, but we try our best, of course, to have a surplus. And, you know, as I like to say also about nonprofits and charities, we have a hard task because our job is to get as close to zero as possible without going over. The service is in the spending. So our budgets rely on being spent. When we have a bottom line as zero, that's fantastic. That means that all of the resources that we were given access to are being spent on the work that we're doing, and that's a real success story. If we have a surplus, of course it's a success story as well. And even if we have a deficit, that also may be a success story. So, but it's really, our job is really to try to get as close to zero without going over, and that is tricky. So next slide. So having come into COVID with the controls that we did have in place, you know, now it became clear that our systems needing this reframe in COVID time were more critical than ever. Suddenly we were forced with major decisions. And, you know, in the case of YWCA, where we have so many different kinds of services, we had to decide, you know, first of all, who was moving off-site, some of our staff had to stay on-site. And so we actually faced some, you know, real equity issues as well, with not all staff being able to have the, you know, the privilege to work off-site. That was, you know, we set staff up from home where we could. To move our operations off-site, it's funny, you know, for years and years, my finance department has been asking if we could have online check signers and if we could do everything paperless and pay vendors through electronic funds transfer. And we were somewhat pushing back all this time. Well, COVID hit, and within 3 weeks, we were completely online. You know, there was no more resistance from any of the senior folks to say, no, we don't want to have our signatures online or anything. So what it meant is that we went to moving basically we took our manual system and tried to replicate it to be an online system. This took basically like 3 weeks of one staff within our program doing it on her own. She was able to access we use GP as our system, and she was able to access the tools within GP to get us to online. We have some of our essential back-end services, such as finance and HR, all moved to online services. Some of the challenges, of course, that we had were fairly significant. For example, trying to get our accounts payable online. Of course, every organization was trying to do that. So banks were overwhelmed. One simple thing we couldn't get the banks to agree to was for us to provide an online signature to them. So we actually, in this time of pandemic, at the very beginning had to, and trying to move as quickly as we could, we had to like get our paper signatures off to the banks. And so that was a little bit of a challenge. We had to train staff in what it meant to now be online. Vendors were not ready to accept electronic fund transfer payments. They didn't want to give us their account numbers, even though the money was going to land right in their bank account. Our Great Plains support, again, everyone and their sister wanted to go online, so they were quite overwhelmed. So we didn't manage to get the support we needed right away from them. So there were some challenges, but I'd say we've been able to work through them. One of the biggest challenges is that we had to do everything so quickly. I remember just saying, yes, just do it, just do it, just do it. We'll figure it out later. And that was a key thing, I think, probably might resonate with many of you, that in this time when it was early days of pandemic, we just all had to be as fleet as foot as possible. So knowing that we would have to work back with our auditors to see, did we cover everything? And of course, our auditors are now pointing out some of the issues that we have to address, which we couldn't address in the moment, but which we're going back and addressing now. Thinking about short-term versus long-term, again, we had to move quickly. We had to do everything as quickly as possible. Is what we have in place now sustainable? Somewhat, I would say. We're going back and looking again with our auditors at everything, and we're wondering if we may need to now hire an outside consultant to take a look and give us something that's a little bit more robust. One of the things we realized early on was that it was going to be important to track the financial impacts of this pandemic. And the way that we could do that was by setting up separate tracking codes. So we decided to put a suffix on all of our accounts, -20. I don't know why we didn't do -19, but we did -20. And we asked everybody, whenever they were thinking of an expense, if this was COVID related, to use the -20 suffix, so that at the end of the day, we could roll up, and when we were giving reports to our board and funders, we would have easy access to everything that was coded as COVID. Some of the other financial impacts were trying to move our systems online, of course. There was a cost to that. There was overtime. There's always additional cost to everything. We're also aware that it costs folks money to work from home, even though there's savings. There's also, internet charges and phone charges, and we run into all of that. So one thing we wanted to do is try as much as possible to keep the controls that we feel so strongly about in place. So we've actually had, since March, we've had, I guess now, three Zoom meetings doing our quarterly reports. So instead of seeing everybody in person, I am now seeing teams on Zoom, and we are going line by line using the share screen function and looking at all of their reports. Our board member said to us right from the start, "How is your cash?" And that was an important tip to remember, to keep our eyes on the cash. At the end of the day, cash, pays the bills. And fortunately for us, we made a decision to apply for the CEWS, the Canada Emergency Wage Subsidy, which I will talk about shortly. And that actually helped us with our cash position. Immediately, we started to move to more frequent senior leadership meetings. So as a team, we used to meet every second week. We started to meet every week. It was clear that obviously it wasn't just financial impacts, the reason that we were meeting. In fact, that was the least of it. We made a decision early on that we were going to try as best as possible. We were fortunate enough to have reserves as an organization, and we made a decision that this might be the year that we would have to spend from those reserves. So on that end, we tried, knowing also that we were going to be applying for the CEWS, which the purpose of the CEWS was to enable employers to keep people on staff as much as possible. We tried as much as possible to not have layoffs. So those were some of the discussions that needed to be had at the senior team. Of course, some of the discussions really, I'm sure like many of you at the very beginning, were all about personal protective equipment. Where was it? Did we have it? Our staff were very concerned. Some were very scared and threatened. Like there was real fear for safety when it was hard to get our hands on the PPE as needed. We began to report to the board on an as needed basis around COVID-19, and also be in close touch with our funders, with every funder, to let them know how we were managing in this time. We put out an urgent call for fundraising as the case for gender-based violence grew, and we were feeling that in our shelters. We were certainly seeing a lot of folks who were dealing with an escalated situations, and also getting many more phone calls. Fortunately, we were able to receive support in this area with this urgent fundraising need. And also we noted that for us, the most vulnerable folks who we serve needed the most support. So if we serve people who were in crisis at a time pre-pandemic, the crisis was elevated during the pandemic, and all of that meant that we needed to be all hands on deck and try to get as much support as possible, knowing that, you know, we were going to just do our very best and just do the best that we could. The good news is that for our VAW, which stands for Violence Against Women programs, funders began to support our homeless shelters and our VAW shelters immediately. We got money through Shelters Canada, which is a federal program, as well as our other funders, even just in an incredible show of support, just sent us in advance. You know, here is money that you, I'm sure, will need for whatever it is, PPE. And then we also had a fund that we could request money for. So of course, again, some of the things were even like more laptops were needed so we could have people work from home more easily, or, you know, food. Our food had to take on a whole new meaning of being catered, so that we didn't have people cooking together. So we had a lot of extraordinary expenses, definitely. Our employment programs moved immediately to do as much online service as possible, and we're really grateful that those funders stayed very consistent. None of our funding was reduced. We received pandemic pay support from the provincial government. We also made a decision, again, as a team, to pay our staff even above the pandemic pay that we got from the province, recognizing that some staff who could not work from home, that was not their job. So for instance, cleaners at the shelter or food service workers at our shelters, they didn't have that option to work from home. So we recognized that and paid an additional 10% on top of their pay for every day that they were on site. We had to take the complicated decision around CEWS. I'll call it CEWS, the Canada Employment Wage Subsidy. Complicated because there's a way that you can apply either for all of your funding or just for your non-government funding. For us, it was really clear that we would need to apply for our non-government funding. Our numbers dropped significantly. We lost $300,000 from our Women of Distinction event. We lost $300,000 from camp, $150,000 from our venue rentals program. So immediately our numbers were down like over $500,000, and certainly more than the 30% benchmark that the CEWS measures. The reason it's complicated is that we made a decision as well to apply for all of our programs. The reason we applied for all of our programs was because, well, we took this decision in consult with our auditors. We had weeks and weeks of consultation with our auditors, with board members, as a senior management team. And at the end of the day, we decided that we would apply across the board, and we would go one by one to every funder and reconcile with them, being transparent, letting them know what we had received from CEWS, and also letting them know what we had spent due to COVID. And so that is what we're actually in the process of doing. We received notice from IRCC about 2 months after we had made the first application to CEWS that their guidance was that we not apply with their programs to the CEWS. So for the future applications, we are leaving them off of our future applications to the CEWS. A federal wage enhancement that I would imagine that everyone here would be entitled to is an automatic $10,000, which was deducted from payroll withholdings. I've also, of course, said that these slides are available to share, so you will have access to these slides through OCASI. And I should say, actually, I meant to say a big shout out to OCASI for this phenomenal conference. I'm sorry I didn't say that at the beginning. It's a wonderful conference, and huge thanks to OCASI and to all the great work that you're doing. So on the philanthropy side, the first contact that we had with foundations was a kind of a not very good contact. They were telling us that they were going to restrict and reduce our funding. That was because, I think if you remember at the very beginning, the markets tumbled and everyone lost a lot of money on the markets. Foundations, needed to go out to all the people who apply to them and say, we don't think we're going to have enough money to support you this year. So we're in a very different mode. So our first thought was that we were going to lose a lot in philanthropy and not be able to apply to foundations. On the good news side of philanthropy, there was the gender-based violence awareness drew foundations into us, and we actually even had a donor, a specific foundation for our homeless shelter, offer to house 14 women in a hotel for 3 months. They actually were at the Intercontinental Hotel for 3 months, and these were some of the most vulnerable folks, women who were pregnant, women who really needed to get additional support. And we had staff go to the hotel, we called it a hotel satellite, and we had staff working there, and the donor paid for the rooms as well as 3 months worth of food. So we're very grateful for that donor. It also allowed us to have greater physical distancing in our shelter itself. So that also was a help. Many of the offers from the foundations were for PPE, so it was really good that we had our account codes delineated, so I could very easily explain to donors what our PPE costs were. We had some grants for general support, which are always the best, because then you can just take that money in as you need it. But some were very specifically designated for either for shelters, for gender-based violence, or for PPE, and those were actually very useful as well, of course. Going forward, we're having a tough time trying to figure out how to budget for 2021. For our year ending December 31, we're now in the third quarter, so we can try to imagine what the year might look like. The CEWS will have played a very, very helpful role in enabling us to maintain our programs, maintain our staffing through this year, but the CEWS will not necessarily continue to next year, and at least if it does continue, it will continue somewhat, but not at the same rate. So we're looking at very much reduced rate there for support. How do we continue to account for COVID costs? I'd love to hear from you, your thoughts. We're at this point going to the end of June. But who knows? These are very uncertain times. It's very hard to be predictive in these uncertain times. Our investments, we are lucky enough to have them. We've been around since 1873, so the investments represent the surplus from the beginning the agency opened its doors to now. As I said, we have reserves there about 2 months worth of our operations. But our investments, it's hard to know where they're going to go. We rely heavily on our committee of investment volunteers. So thankfully, they are, even though it's uncertain for them as well, they're just really good at sitting with the numbers and with the uncertainty at this point. That takes me to the end. Whoops. Sorry. Oops. Uh-oh. I did escape out of my presentation, but you know what? My last slide really just said questions. So we are at the end of the time for my not the time, we're at the end of my slides. And now, of course, I'm very interested to hear from all of you about your successes, your challenges, or any questions you might have. I was trying to give as best as I can an overview of some of the things that at the YWCA, what we have been contending with, what some of the challenges and some of the good things have been. But of course, you know, we're just one organization and I would love to hear from all of you. So thank you very much. And now the chat is open. If you have any questions, or even if you'd like to raise your hand, I could also call on you. Oops. Let me just see if someone please raise their hand so I know that, you know, you at least heard me. Oh, okay. Colette, I'll unmute you and you can speak.
Hi.
Hi.
Thank you for sharing that. That was insightful. I picked up a few little tips. It was actually strangely comforting to hear another organization's struggles. Our organization, the Center for Canadian Language Benchmarks, based in Ottawa, we're mainly funded by IRCC. We're much smaller than the Y for Toronto, I'm sure. But one of the struggles we've had is spending the planned program expenses, which therefore inadvertently impacts our admin costs, or what we can claim for our admin rate. So we're finding ourselves in a predicament where we've planned to have a certain amount of revenue in our budget for our admin costs. And I mean, that's covering key personnel like accountant and ED, for example. And so I wondered if others had this situation and how they were handling it, or, you know, has anybody floated the idea to IRCC or any other funders to retain the agreed upon admin amount? Because we're coming up against some massive slippage due to COVID and not being able to do some of our face-to-face delivery as planned. And we are scrambling, mind you. We're not sitting doing nothing. We're pivoting. We're coming up with other ideas, how we could spend that money. We're trying to consume it in a way that's useful to the community. But I'd love to hear from others if they had this.
So 2 people have spoken up in the chat. Thank you for that, from Fran and from Lucia. And I was going to say as well, you know, it would be helpful to speak with your program officer, because they are able to decouple the admin calculation from your program expenses, and they're very interested in doing that this year. And Fatima from the Philippi Rexdale Women's Center would like to respond to this. So please, Fatima, go ahead.
Hi, sorry. This is Fatima from the Rexdale Women's Center. I just wanted to say that the OCASI Board of Directors has met with the officials within IRCC, and that includes Jillian Wen. we have been told that, you know, there will be a decoupling, that this should not be happening. And the concern is, we've raised this, OCASI, I sit on the CASI board, by the way, sorry, I'm speaking without a context here. The OCASI board has raised this concern that we're having different program officers interpreting this directive very differently. And I think it's important that maybe one of the things that you might want to do is, yes, connect with a program officer, but also as a backup, speak with Debbie or some within OCASI to find out exactly what approach should be taken, because that should not be happening. This has already been stated across the board that there is the decoupling. It's a simple procedure on the online portal, GCS portal, and it should not impact you in any way, shape, or form. They are looking to decommit slippage, because yes, if it's not, you know, and I use air quotations, COVID related, then they were going to definitely claw that back, but it does not impact your administrative funding that you're getting through IRCC. So just, you know, again, it really discourages me to hear that the sector is getting different messages all over the place. And that's what's frustrating with all of this. In managing IRCC's contracts, agreements, they're already complicated as it is, and then adding this complication to it.
Thank you.
Fatima, thank you so much. Thank you so much for adding that, and sorry for getting your name. I mixed up your last name and the Rexdale Women's Centers.
That's okay. That's okay. No worries. No worries.
Okay,
It's a long day for everybody.
Yeah, exactly. There is a question here from Nectarios. Are you planning to issue T2200 Statement of Employment Expenses for staff working from home for 2020 tax year? We are. That has actually come up through the union. We're with QP, and we are able to do that. So there's a lot of good information on the CRA website. As basically, if staff have been working from home for more than 6 months, that's de facto a way that employers can sign the form. And what this does is it allows some of your staff to calculate a portion of their home expenses and get a tax break for it. So we are doing that. And let me see, there's another question here. Oh, go ahead. Hi. Oh, Carl. Okay, I thought, oh, welcome. Ifat, what do you think about 21-22 fiscal year budget? Is IRCC going to continue as they sign 5 years contribution agreement for most of agencies? My understanding is that yes, but Fatima, maybe you know more than I do on this, and specifically about IRCC. I haven't heard anything about not going forward, so yeah, I'm assuming yes.
Okay. These are all somewhat anecdotal. I can certainly speak on the fact that we've had, again, you know, this is IRCC attending OCASI board meetings and bringing information, that what we've heard for the next fiscal period, it's same budgets. Again, we've heard that there will be no cuts, and but you know, I think for me, you know, I say what the proof is in the pudding. We'll see when the budget comes down. But I've also heard from the province that they're also seeking to maintain budget levels in current 2020, 2021 levels. So I think we're seeing that. It really varies across funders, and certainly the province and under the newcomer settlement program has stepped up. IRCC has stepped up. They have made those statements. Again, you know, proof will be in the pudding once we get their new agreements. And also I've heard from, if you're funded municipally, every municipality has a different approach, and there might be some cutbacks or small increases. It's really hard to say. But I also heard that the United Way may be having some challenges, and that they're potentially looming issues coming across. But yeah, Ifat, hi Ifat, nice to see you virtually. I miss you so much. My little side note, sorry folks. But I've heard that 2021, 2022 is no cuts in the budgets that were negotiated under the CA that currently exists. But you know, once the budget is tabled, we will get a better sense of what that looks like.
Thank you, Fatima. Once again, much appreciated.
No worries.
Yeah, I mean, IRCC, we have many employment programs. IRCC covers 2 of them. So, you know, we were thankful actually that most of them seem to be, as Fatima says, going forward without any cuts at this point. Are there any other questions? I would love to know from any of you some of your challenges, or you know, how you are handling the financial challenges. Have you moved online to offsite? Have you taken your finances offsite? How did that go? And also, I just want to offer too, you know, this is one workshop in this one day, but if anyone ever wants to reach out to me, please feel free. You know, this is now, but like for any time in the future, if you have questions. Sometimes it's hard to ask questions in the heat of the workshop. So please feel free to contact me. You can find me at YWCA Toronto if you want to save your questions. But I think it would be great to have questions, because then everybody gets to benefit from them. And I think some of the questions that we've already covered, I think are useful for everyone. So let me see, I'll peruse the lineup and see if I see any other hands up. I have to say, I love giving workshops, but I have a harder time on Zoom. Harder to read the room when it's like a flat screen. But anyways, thank you. Oh, there's a comment from Lucia. Please go ahead.
Thank you. I found your comments very helpful. I think we went through a lot of the same things of moving as much online as we could. We got a remote remote deposit machine to deposit checks, which took way longer than it should have. But of course, that's because everyone was trying to get them. So I can now deposit checks from the comfort of my dining table. But that's been very useful. The one thing I had not done, and I'm glad you mentioned it, is talk to our auditor now to make sure we've got all the checks and balances in place. We've been going through our own checklist, but it was a good comment for me to go, no, we don't want to wait till next year's audit. We need to bring them in now and just let them take a look at our system. So thank you for that.
Great. What organization are you with, Lucia?
The Kitchener-Waterloo Multicultural Center.
Okay, great.
So we have, oh geez, half of our budget by IRCC, another third from the Ontario government, and then fee-for-service activity as well, which has taken a hit, I think, like a lot of agencies. So we are dealing with that with the same, as much as possible, the board and senior management agreeing that we did not want to have any layoffs. We wanted to try and keep people working. So we're struggling a little bit with the unfunded positions in our organization, and the wage subsidy will help for that. But
yes, great. Well, good luck with that. Thank you, Lucia, for your comments, and good luck with that.
thank you.
Elizabeth, where are you? Immigrant Women. Hi.
Hi, thank you, Lo. I have a question for you, for anybody who wants to comment. We, as an organization that, Immigrants Working Center in Hamilton, an organization that relies quite heavily on funding from the federal government, 90-95% of our budget at any point in time. We've been able to operate with a lot of stability through the crisis, but we have been talking a lot, or we were talking a lot leading up to this around revenue diversification. So I wonder if for those of you who had a very kind of diverse portfolio of revenue, if that's changed your perspective, if you're changing the way you plan long-term around the number of funders and the type of funder, having been through this experience.
That's a great comment and question. As I mentioned, you know, we typically have made it a goal to diversify our revenue stream even more. But what this pandemic has shown us is that we were really lucky and fortunate to be so heavily government funded. So I think it does give us pause. then again, we were able to access the Canada Emergency Wage Subsidy for those programs where they weren't government funded. So that was also very helpful for this year. I don't know how it will be in the future. And so, yeah, it'd be interesting to hear from others. Feel free to jump in if you want to try to just, it's easier for me in a way if people jump in with comments to Elizabeth.
Can I just weigh in on this? This was raised yesterday by Chris Friesen at his presentation. The fact that organizations have been pushed to become more self-sufficient, becoming more resourceful by generating non-government revenues, and that this pandemic has put them at greater risk. And that was an interesting comment made yesterday as we grow in the sector. But the reality is, yes, now we're going to be in a position where if we're not heavily government funded, does that make us more precarious? And I think that's a really how do I say it? I don't have the answers to that, but I've seen organizations that have shifted to become more, doing productive enterprises, generating fundraising dollars. And I know working within the women's sector, some organizations fundraise half of some of their staff salaries because they have no choice because government revenues are lacking. And I think this pandemic has really highlighted the critical balance that's needed between government support and delivering the mission and the mandate of government departments as opposed to becoming, all social enterprises across Ontario. And that's what's scary to me.
Yeah, thank you again, Fatima. So well said. I don't know if anyone else wants to weigh in on that. Colette, you had a comment?
Yep, sure. It's weighing in on that. I was going to bring it up as well. So thanks, Elizabeth. When I was hired a year ago, one of the goals was funding diversification. At the CCLB, we have about an 80-20 mix. We've been carrying that for several years now, 80% government and 20% other. And I think one of the things about diversification is there's different ways to do it. And then there's different ways to mitigate risk once you have that diversified portfolio. So for one, you can diversify the governments. So one of our risks has been that we became too reliant on just IRCC, and not the other provinces. So diversification can also include other types of government funding. That's one point I wanted to make. And then the other point I wanted to make was in your management of those funds, I think one way to do it is to not have people or departments entirely relying on those non-government mixes. So the more you can create salaries that have multiple sources from your portfolio of funds, the more you're able to carry people's positions when you're in a downtime. So to not have employees who are only funded by this one project or this one source, but to try and mix it up as much as possible. And that way when something goes wrong, it's part of something that goes wrong. So if you have reserves or some other way, you can kind of get through those tough times. Those are just some of my comments.
That's great. Thank you, Colette. Those are really, really good points. And there's comments here in the comment box that say good points. So thank you. Let me see if anyone else has their hand up. This is, just have to peruse the list, or feel free to jump right in and speak into the void here. I don't see any other hands. I guess I could encourage you to, go to the marketplace of the conference. Take this time as you need it. I will stay back, and if folks want to leave, if there are no other questions, leave, but I'll stay back. Can we talk about reserves? Okay, here we go. Thank you. Can we talk about reserves and fearing dipping into reserves and not having what our funders require? Okay, so let's start with that. The City of Toronto has always used 1 to 3 months of operating as the way to measure adequate reserves. And I think, you know, it really depends on the size of your organization. Reserves are a funny thing because for some organizations, it's very hard to build up reserves because you don't have opportunities to build up reserves when you're not that diversified. So if you're only getting government funding only, and you know, anytime that you're underspent, that money goes back to your government funder, you wouldn't have an opportunity to build up reserves. But as we know, reserves can build up, you know, through interest, through donations, through non-government funding, and they can build up over time. I think, Fatima, you raise a really, really solid point. How do you manage in this time of such uncertainty to know what's reasonable to spend in your reserves? And I would say, you know, that's just a careful decision that has to be taken with the board, with senior staff to figure out, you know, reserves are sort of known as like reserves saved for a rainy day. It's pretty much raining right now. You know, the rain is here. So in a way, no one could be faulted for spending reserves, but I would say that you probably do want to have a floor where you don't want to go below because, you know, we've also very sadly seen cases of organizations not pulling through, and reserves are what are going to, as little as they may be at times, are kind of there to also keep us just afloat. And so you know, I don't have a magic number, but I would say under a month of operating, you're getting below what's recommended by any, you know, the United Way, City of Toronto, and any other funders that use that sort of measurement. So I would try not to go below that. What do others think?
You know,
Fatima.
I'm just, you know, although there's a minimum doesn't necessarily cover your liabilities. And I think that's the critical element here. And if we're talking about when we've seen organizations having to fold or to, you know, claim bankrupt or to fold, or they don't have enough money to pay their staff, is it bankruptcy? Is it paying out whatever you can to employees and vendors and creditors? It's a whole messy process. And you know, I've seen funders, I mean, I'll give you an example. One year we had to take, it was like less than $5,000 from our reserve because we implemented a special project job costing system with our accounting system. And they're asking me why we took that out of reserve. And I said, it's like less than 1% of what we would be using overall, but they made a case for wanting to understand what that was. And I found that ironic. But I think, you know, if organizations have a policy, let's say no more than, you know, you have to maintain a minimum of 1 month, but let's say you have, you know, up to 6 months. In some cases, some agencies are allowed to keep and to carry 6 months. Do organizations have like a 10% threshold, a 15% threshold? What do they find works for them?
10%, what does that mean, 10% threshold? What do you mean?
Using 10% of your reserve funds, but still maintaining that one, you know, that 1 month minimum. Let's say you have 200,000 and 10% represents 20,000 that you can only bring in while still maintaining a 1% minimum. So is there some sort of threshold that organizations have a policy on that would guide them to say, we're not going to decimate our reserves? Because I've seen agencies do that. They've used up all their reserves and then they're, you know, they're house rich. I know I don't know what's that analogy, but when it came to cover their liabilities, they had no money whatsoever, even though they had grants, but they had no money to cover their liabilities.
Yeah, I think if you know, like what using your reserves means is you're going into deficit. That's another way of saying you're relying on your reserves. So you can only go into deficit for as much as you have. You know, it gets into the balance sheet basically, and looking at your reserves and seeing how much a deficit your reserves will allow you to carry. So I think it's a matter of projecting forward. You know, is this a temporary kind of Band-Aid? In a way, that's more what the reserves are for, or for a specific project. As you said, I think that's very interesting that you used your reserves for a very specific purpose. Reserves are not going to be able to backstop, you know, indefinitely. You need to make sure that at some point there's some way to have a plan that's going to get you out of it. You know, so it may be something that's undertaken with your funder as a discussion with them to say, you know, we can contribute from our reserves this amount, but is there a way that we can have additional support from you? I mean, there's just, you know, we're in a position, someone also commented in the chat about working virtually for another 3 or 6 months, worrying about rent. You know, so, you know, in other words, offices are not being filled as they were. And how do we cover rent? So all of these things are, you know, they're sort of in the void, because we don't know when the end date of this is. But I would say that at least what we can all do is take an end date of, for now, till the end of June, let's say, and try to track out what are the known expenses, what are the known revenues, where is that going to get you in terms of what you have to draw on for your reserves. So at this point, gathering information is really key, so that you'll know, okay, well, we're going to be short this amount. What, you know, how much longer can we sustain our rent? Do we have to make a decision about, you know, not leasing this space? I mean, there's a lot of very, very tough decisions, you know, including, you know, whatever they may be, layoffs, not like rental, all of those kind of decisions are at every table right now being talked about. And it's very, very hard.
I just want to add a quick comment on the rent situation.
Yeah, sure.
Darius, by the way, the finance manager at Ocasio, and it's nice to hear. It's nice to hear all of you. So
Yeah.
my understanding with the rent situation is I don't know what everyone's you know, agreements. Thankfully, we are able to build some of our rent into, based on the FTE of, you know, of the organization. We are able to build our rent into the contribution agreements. And since we just discussed earlier that you know, the budget for next year is not changing, that means we at least have some of that rent cost covered for, you know, for the next couple of let's say, as things stand now, it would be, you know, for the length of the contract of the contribution agreement. However, the other discussions we are having with the way things are going is it still sustainable to hold the space that we have? And if we do, are we going to have, if let's say we decided to go hybrid and say, okay, since, you know, the situation has changed, people can actually, you know, perform and work from home, are we going to downsize the space? And if that, is that going to affect the, you know, the funding for the rent portion in the agreements? So my understanding, so I don't know what everyone's, you know, the way their rent is paid for, but in our situation, we are able to build some of that through our major funder, which is the RCC. So that kind of gives us some leeway in terms of planning the next steps, which we are really considering, because we have the same issue as you. We've been, we have the same, you know, we've had the space for since March. We've been paying full rent, and it doesn't seem like it's going to change anytime soon. And we're looking at it and how feasible can it be, and, you know, as far as the next couple of, you know, the future is concerned. So yeah, I mean, you're not the only one.
Yeah, Nectarius, thank you. That's such a helpful comment. Also, it brings to mind the comment that was raised earlier about, you know, if you actually, I think Colette raised it, if you decrease your rental costs, does that actually impact your admin fee ultimately? So, you know, I think there's a lot of hesitation to change anything, especially if the funder is paying for it. But, you know, there's all of these considerations. So thank you for, there's a comment here. I told you I can't do two things at once, but I am not sure our fiscal year will be the same. I have not heard from our IRCC that there will be no cuts.
Yes, I was going to, this is Carl, I was going to say that I was on a call with IRCC last week, and they have committed to supporting budgets this fiscal year. but they have not made any comments about next fiscal year. So I would think that we will see cuts in year 2 of our 5-year agreements.
You know, it's kind of contradictory, Carl, from what we're hearing. So I think this is important. Maybe this is a recommendation, Nectarios, that comes out of this session to OCASI board, is that we start thinking about 2021, 2022 now.
Absolutely.
And that we need to get that under, you know, December's right around the corner. I mean, November is next week, folks. And most of us, some of us started January budget, some of us don't, and some of us are April budgets, but we need to get that down now because employer obligations are looming over us, and rent agreements are also looming over us. And so for sure, we need to push that. And maybe the recommendation from this session is that, again, we get a clear statement from Fraser Valentine and get him to put that out there and state IRCC's position on the incoming 2021-2022 fiscal year's budgets.
Absolutely, thanks, Fatima. I will definitely.
The minister will be making announcements in November about the numbers of immigrants to the country, and from that, I think IRCC has promised that we should hear something before the end of the calendar year about the budgets for next year. But I did not hear anything from them that even suggested that the budgets weren't going to be changed for 2021 and 22.
Yeah, and
I think just to add into there, looking at the levels funding and what that model looks like has some other challenges to that as well. And I think that would be something that the OCASI board could focus on as well.
Yeah, so for OCASI, such a great advocate for the sector, and so important right now as we head into a much more unclear 21-22. Ahmed, did you want to say something?
Yes, sure. I don't think when there is, and I was at the OCASI board at that discussion. I think the comment was for this fiscal year. It wasn't for next fiscal year.
Mm-hmm.
Certainly, in the financial situation of the government doesn't look good. I think we should be prepared that the next fiscal year, we hope things stay the same, but would have an impact. And it's also dependent, as Carl said, with regard to the numbers they are projecting for the next year immigration levels, and whether the country is open to receive them is another question, and hope so. But there's a lot of unknowns. So we have to just really think things might not be as good as we expect.
Yeah, sadly, sadly that makes sense. And Carl, thank you as well for pointing that out. That does, it sort of makes sense that this year ending 21 will be the year that, everyone had to scramble, and we got as much support as possible. But the next years, there's going to be pressure on the governments to cut back as well. So, sure, you're right.
Well, can I just weigh in? In fact, the whole issue with rent is also about the fact that, our governments are seeing the fact that we're, now in most cases, almost 100% virtual because the choice isn't there. But when the choice is there, are we, I have the same fear. Our capacity to maintain our space is going to be tied to how many people we have sitting in our office space. Let's say, for example, our link level 6-7, they're thriving virtually. We have, 20, 25 people registered who may not necessarily want to come back to the classroom. Then what does that mean for space allocation? And I know that IRCC is notorious for this. They've done it to other organizations. They pay them based on the hour of IRCC service use. And that's a very dangerous place to be in. Because that allows you very little flexibility. So let's say 7 hours of the day is occupied by, someone sitting in that space, and then the rest, let's say in the evening or something, they don't want to fund that because no one's going to be there. And so already a precedent for funding for, it's like, renting a motel by the hour, renting space by the hour may be a reality that we're going to be seeing. And what does that mean in terms of agencies being able to carry these spaces, even though you may be using it for other programs for lower level students who can't use, who can't use internet and can't use digital devices to learn? What does that mean? But what does that mean for the organization and being able to carry the full rental costs? Our landlords don't care if you're there 7 hours or 24 hours. The fact is the rent is the rent. And that's a very dangerous place to be in. And so I think, I'm not sure, Nectarios, if we can raise these issues at the OCASI board when we also talk about funding levels and funding budgets with IRCC into in the new fiscal year. I mean, we're all, geez, I can't even begin to think. Already our staff are funded by the hour. Now we're going to have our spaces funded by the hour. It's crazy and very precarious.
Yeah, these are
Yeah,
really
I've made these
critical issues.
notes. I've made these notes, and I will definitely forward them when we have our management meeting at the same time. And I'm sure some of you are on the OCASI board, so I'm pretty sure if I miss them, they will come up.
Yeah.
My comment regarding the rent situation is that so far what the contract says is that's what I'm claiming. It doesn't matter if somebody was in the office, and I've had this conversation with my program officer, and it doesn't. If the calculation that was done based on that position is what I'm claiming monthly, whether the staff is in the office or not, and then I believe that they will be if there are changes in space, definitely that's a conversation that's going to be hard. But as right now, it's best, my calculation or my claim is based on what was initially calculated, and I haven't changed anything from that, and my program officer knows that.
And the other thing probably may be careful about it is sometimes an IRCC might not be thinking about that. For us raising the issue, might be reminding them to comment on it, and so sometimes it really has that.
It is, Ahmed, it can be a double-edged sword, but I'm telling you right now, I've heard other government people talk about that already. Do you need your space for your link level 6, 7 students? Are they going to stay virtual now? Are you going to be needing that space? So avoiding it doesn't mean it doesn't come around the corner and hit us like a Mack truck.
I agree. It could come up, but we especially IRCC has not raised that now. And also we have a contract. We have a lease contracts that is in conjunction with the funding. So there's still an argument to make. And sometimes, unless they raise, I think sometimes it's just going and raising is giving somebody ammunition to react on it. So, and it's risky. I agree with Fatima.
But I also think that there's going to be a glut of space on the market, and I think that we have to think about.
Yeah.
I mean, we're certainly thinking about how we can negotiate with our current landlord.
Yeah.
So we either move. We can make the assumption that we're going to have less money for rent. Yeah. So I think we want the landlord to share some of that burden as well. Absolutely. So I think it doesn't only depend on IRCC. I mean, they're paying the rent, but we have to look at what we can do with talking to our landlords, because I'm sure my landlord doesn't want us to leave.
Yeah.
Yeah.
Good point.
Carl, that means having a really good lawyer to be able to do that for you.
I'm not even talking about a lawyer. I'm just talking about the reality. I mean,
for sure.
Yeah, it's not talking about a lawyer. I'm just talking about, what would the landlord like us to do? I mean, if we are doing this work virtually for the next year, then are we going to pay the same amount of money for the spaces we are now?
Absolutely.
Yeah, I believe that if I'm to comment on that, I believe that you can approach the landlord, but don't have any obligation to reduce if you have your lease agreement.
That's right.
I don't think they have any obligation to reduce your rent. Maybe if they like you very much, then probably. But I don't think the approach should be. They might say yes and they might say no, and you should be ready for both options.
But I think what Carol is talking about is that not only if you are negotiating or negotiating whatever, the now commercial space, again, the situation is bad in terms of the government, because more and more companies are actually shutting down their physical locations and going in online, and so, or working from remote. So basically there will be a surplus of space. So we might be, the landlords might not be strong enough to twist the way they were doing to us before. So that might be in the situation that you can negotiate and say that, you know what, I have other options to do, and especially if you have other options.
Yes, and if I may point out, if everyone can read in the comments from Jana, they certainly don't have an obligation, but we certainly have bargaining power. Smile.
Yeah, I agree.
And also from Lucia, congratulations, because she negotiated a new rate with her landlord and it was not a lot of work. I agree with Carl. Obviously not all landlords will be open. So, so there, you know, I think what some of the takeaway here for me is also, you know, just when it gets down to the very practical matters of keeping the lights on and keeping the doors open and keeping programs running, you know, are a challenge when, you know, if rent is threatened and if admin fees are threatened. So, and I think Nectarios, you have taken note of that, as well as Fatima for the board of OCASI. And I think what I also see is that sharing resources, sharing stories, sharing experiences really can embolden each other and support each other as we go forward in this very unpredictable time. So, well, any other comments? Again, there's 15 minutes left in the session, and again, I'm happy to, I will be here. So Fatima negotiated a 5-year lease with notification to renew with 90 days notice for the coming year. Right. Thank you.
Yeah, so what we did is, you know, every year we let the landlord know within the 5-year list, that's we're going to continue for the coming year. And we did negotiate based on the fact that they know that we're nonprofit funded. We went through that whole conversation about all of that. You know, it just, for us, but it meant, you know, having that in our lease agreement makes me sleep a little bit easier, knowing that if funding cuts are going to come, I can pull out and not be responsible for a 5-year lease if we're in our 2nd year or 3rd year of our lease. It took some negotiation, but it can work.
Yes, and I think funders will also agree to pay for that that period where you're on the hook for those 90 days. Director, to everyone, in our lease we included a clause noting if there's a decrease in our funding that we would break the lease. Actually that brings me to a point that's a really good point. We have done that too at the YWCA. We've put a clause into our leases that say this lease we would have to break the lease without any funding. The landlord knows that we're funded. We also recently negotiated, because we're a charity, we negotiated with our landlord through an exchange of checks, a reduction in our rent, and then they paid us a donation. So we paid the whole amount, which was a higher amount, but they gave us a portion back as a donation, and then we gave them a tax receipt. We did this, let me tell you, it was a very interesting negotiation, because these are not matters that can, you know, be dealt with on too fine a point. Well, it has to be a very fine point. We had our auditors, of course, involved in this. It's called an exchange of checks, so it can be done. Luckily, our landlord was interested in getting a tax receipt for and he made a donation to our organization. We gave him a tax receipt. You know, we paid the full rent, but got some back as a donation. So happy to share more details of that with you. If anyone, again, I shared my email in the chat. If anyone wants to take any of this offline, please, you know, just let me know that you were in this session, and, you know, we can connect anytime. So we've been notified by AV. Time has flown. 15-minute warning before session is over. Eventually we are going back to provide our services in person. It will be so much chaos to get our offices, classrooms back. We have done that. I'm sure others, okay, hold on, sorry. Okay, in terms of going back into the office, it is a change. We had to do the whole plexiglass and all of that. But yes, one day this will be over. Would that be considered a rent rebate and that we would need to notify IRCC? Yes, and in fact, no.
No,
It wasn't. Because
even if it's a rent rebate, they
yes.
have made allowances around how that can be done. That happened about a year and a half
exactly.
ago. So they're not taking that rent rebate anymore.
No, and thank you, Carl. It was not a rent rebate because it was actually a separate donation.
Right.
So we pay the full rent.
Okay, so as long as it's, okay, I guess I'm just trying to understand, because I would see that in some ways as donation as part of coming from the rent and could be perceived as a rent rebate, but it's not. I understand the difference between rent rebate, they're not clawing that back, but if I guess it's up to the landlord to decide to donate to you for whatever purposes, whether he's getting that money through whatever means, I guess you can say, then we don't have to report that to IRCC.
No,
okay.
exactly.
Just thank you for that clarification.
From the landlord's perspective, they're paying tax on the full amount of rent because he's getting the full amount of rent. He's then giving a donation to us for our services, possibly in a whole other area of the organization, and we're giving him a donation receipt. So two completely separate transactions. And that's why we set it up with our auditors so that it was completely good. Good being a very official word.
Sorry, Elizabeth, this is Adina. I just have a question. So is it something is the fund that paid for the full rent, or they're just cutting some of the portions of that?
The
funder is paying the full rent, but
yes,
the landlord is giving some as a donation back.
Yes.
And also, I mean, what they are donated is not something agreement on the paper. It's just a personal negotiations or something. I mean, it's not something that it doesn't. The land, in other words, the landlord will not indicate that is the portion of the rent that is given back to you as a donation. I'm just asking you because I thought if there is a way that we could also find a way with our landlords. That's a good thing to hear.
Yeah, I mean, you could talk to your landlord about the fact that if they wanted to give you a donation, you as a charity have the ability to give them a tax receipt. That's basically what we did. So they just agreed to give us a donation. But it's basically not attached to our rent. It just happens that it's our landlord who's giving us this donation.
Yeah,
so,
but do we have to have a verbal agreement that if we give you more rent than what you will be entitled or something, but get the money back to us?
Yes, actually we do. We have that. We have a written agreement with him that he will give us this donation.
Interesting. That's good to know.
Mm-hmm. Mm-hmm. Yes. Thank you, everyone. So Rose has done something similar with other vendors, checked with our lawyer and accountant. 2 separate transactions. That's exactly the key. It's called the exchange of checks method, and it has to be 2 completely separate transactions. So great, lots of great sharing, lots of great ideas, lots of good, good to hear from all of you. Really, really good to hear from all of you. I wish all of you well. I wish you good health and sustenance in your days and in your organizations, and also to have a great conference. And again, thank you so much to Okasi for bringing us all together. It's such a privilege to be able to share in this way and to be brought together in this important time. So thank you, everyone. I will stay for my allotted time, which is 7 more minutes, but if folks want to let themselves out, that's fine. Thank you very much. Okay, I'm just also going to read these chats. Thank you, thank you. That's a great idea, Nectarios, about forming a working group. Sure, would be happy to. Francois, our landlord said his public funded organization. Yeah, I mean, for Francois Gagne. Okay. Oh, Francois, you're there. Sorry. Yes, tell me more.
Yeah, we asked our landlord if we can get access to this incentive given by the government. He told us as a public funded organization, we are not entitled to.
That's not true. I don't think that's true. I think that you mean the rent rebate that's being offered through the CRA?
Yes, because they have to apply on our behalf.
Oh, they do have to apply on your behalf, but I'm pretty sure that you are able to get it if you are a publicly funded organization. You know, the audit firm Ernst & Young actually, and I think as well the United Way, were teaming up with some lawyers and accountants to advise people in our sector about how to access some of these grants.
Yep,
so you may be able to access information through either the United Way or even through Ernst & Young. I will, if you're not successful through United Way, let me know and I'll try to get you the number through Ernst & Young of, there was a team that was set up that was giving advice for exactly these things. And we explored as well getting a rent rebate from the government. It was, when we did the cost benefit, this was us as a landlord applying. It wasn't worth it for us as a landlord. So I think landlords are somewhat reluctant to apply for some. What's that?
They are very smart when you come to get money from us.
Yeah. You know, the thing is, for the landlord, the reason they don't want to do it also is because they are expected to contribute 25% of the rent in that case. So they contribute 25%, the government contributes 25%, and you would pay 50%. I think is how it works. So the landlord doesn't have an incentive to do that unless you're threatening to not pay the rent at all.
Okay. One of our program locations, we have been paying 4,700 and some change since March, and no program have been run at that location.
Yeah, yeah, that's, yeah. Thanks, Jenna. Thank you. So Francois, yeah, thank you. Explore that with United Way if you would like. And also, I think they're going to cut us off in 4 minutes. So just, we can keep talking, but in case we lose everybody, it's been a pleasure. And if we lose everyone, it's just because we're getting cut off because of time. But Francois, does that help you?
Yes, for now, I will explore further. Thank you so much.
Yes. Okay, no problem. Thank you.